Good morning, Chris.
Good morning, my friend. How are you?
I'm great. This is Brian Jones. I'm here with Chris Hood, pro options trader and world's most interesting man. Nice. What's been going on with you?
Oh man, not much. Just trying to survive this washing machine that we're in at the moment. You know, you got the life savior of Elon going in and buying our Twitter. I was watching some things on Fox News that they were talking about it. I really don't get the whole big deal about it. You know, is he really going to be a bastion for free speech? I mean, it's a bit strange to think that he's going to save the world. I don't know, man.
Some article. I saw an article about like Bezos was claiming that he was kind of a shill for China or something, like because of the lithium battery stuff. And then people were talking about how Amazon had made all these concessions for China for business. And like, who knows? I mean, it's just
all of these guys. They got far too much money and not enough brains. I sound like when you say they don't have enough brains, well, they've certainly got more money than me. But at the end of the day, I was asking my wife, like, what difference does it make to me? I don't even use Twitter. And then you see all these things coming out. If Elon buys this, I'm leaving. Well, I don't think anyone cares. Like, that's the thing. I don't think anyone cares about what you think. If you had $44 billion to spare and you could go around and buy things like this, good on you, man. Like, it's going to be interesting. I think the problem that we've got is that we have a market that can be not manipulated. It's not in the sense of, egregious kind of manipulation. It's more like if the market can move on the whim and fancy of one person's action, it has to tell you more about the state of the market than anything else. And I think we've got to be very, very careful. This is not, it's almost like we're clutching at straws. You feel like the market's clutching at like the smallest bit of good news just to keep us, afloat for one extra day kind of thing. And eventually it all just falls over and then, things go belly up. But it's a tough market to trade. This is not an easy market to trade. Yesterday, we got so many multiple signals that happened during the day in different directions. This is not a market for amateurs to play around in. I mean, there are times where I just say, you know what, I can't read it. I'm sitting on the side. I'll just wait for it to be a little bit more clear, let it to play itself out, and then come back and trade. There's no, traders should never feel a compulsion to do anything. There's always the biggest choice we have is the choice not to trade. And when you choose not to trade, you're not vulnerable to those kinds of whipsaws on your emotions and things like that. So be careful. This is not an easy time to trade. We're coming into May. May historically is not the best time of the year. May to September, not nice. So you got to be prepared for volatility. You got to make sure that your strategies are on point, and know what you want to trade. Otherwise, you're going to get sucked into everyone else's ideas, and that's not healthy as well. So be careful.
I've got a light book right now, and I've got a lot of things that are sort of have like a low beta. So like more, I've got some commodities trades on.
Yeah,
working out pretty well.
I've got a couple. I mean, I'll show you a couple of things that I've got on, and one of the things that I like at the moment is obviously Google's earnings come out tonight. So there's a small Google trade that I'm looking at doing today. But we need, a couple of things to work for it. Here you can see Google, divergent low bar prints yesterday in the morning. When a purple candle prints, we always know a higher price is coming. We've got this little zone of resistance that sits up here. The 30-minute chart looks very nice. This sort of long triggers we have here with a moving average cross above the 21 don't have a lot of resistance. We have some demand that sits up here. So we know that if Google can sort of break above this level here, 2466, it's only $8 away from where we are now. We could see a run up to there. Here on the hourly chart, we also have a volatility band shift. We're at the 21. We've got to move up to 2504. Which is pretty similar to here, right? There's 2504, here's 2504. So this is sort of open air earnings tonight or tomorrow or tonight, sorry, yeah. Here you got on the day chart, divergent low bar prints. We know that with the purple bar, prices will rise. So we could open inside the range of yesterday's candle and move slowly up. And 2504 is just above this zone, right? So today, if Google can open up and close above this zone tonight, this could be quite an interesting play, because then it opens up the door to 2.7 on the day chart, which is a pretty nice trade. It has to get above 2.6 in order for the volatility band to start shifting color. Weekly chart looks a little broken. We've got a gray volatility band, green candle, which is a shift in momentum. We are going to open slightly lower today, so this green candle is going to get a little wider. But where it closes on Friday is going to be interesting. We have to see it close, hopefully above the close of last week, which is up here. So
well, historically, Google does well after earnings, or no?
Historically, the trade that has the highest win rate on Google at earnings is a 50-25 delta put spread. And usually what you would do is you would trade it for the week after earnings. That has around an 83% win rate. So we know, like statistically, we know what are the trade types and when the best time to open those trades is. So usually the day before earnings, which is today, or preferably yesterday, it would have been a better time to enter, but today is as good as any. They have around a 70 to 80% chance of winning. So we know that's historical. That's over the last 12 earnings quarters. So, you know, that's the trade that I'm going for. Bull call debit spreads, you tend to see them overpriced a little bit leading into earnings. So be careful trading them now, especially if you're going to get this vol crash that will happen tomorrow. And it depends on the move, right? If we don't get a big move tonight, those debit trades are not going to work off very well. So you've got to find that balance. A lot of people still, I hear, you know, and I see this all the time. Oh, this is the only way to trade. This is the only way to trade. I'm like, no, it's not. You know, the more people become committed to one hill that they want to die on, the more likely that they are going to die. You know, you have to find that sweet spot for yourself. Like, what trades really work for you? I know some people who are super, super smart can manage butterflies really well, but give them a simple long call option, they screw it up, and vice versa. You know, there's no right or wrong. And people who think that you can only trade in one direction, that's crazy. Or trade one strategy. You have to trade what's profitable. Doesn't really matter how you make it, as long as you make it.
I was thinking about throwing on a butterfly. I actually tried to get a fill yesterday because it was a $40 trade for $14.80 payoff. Just on a
butterfly. Yeah, I think a butterfly could work. The problem with them is the pin, right? You have to get the pin. So it's much easier to trade them on a Thursday for Friday. Much easier, because the thing is, you've got this expected move thing that plays out during the week. So doing a butterfly for a midweek earnings trade, that's a hard trade to win, because you really only make max gain on Friday, and a lot can happen between the earnings announcement and Friday, especially if it's happening on a Tuesday. So you still got Wednesday and Thursday and Friday. So if it was a Thursday leading into a Friday, you've got theta, you've got expected move, expiration, all of those things playing into it. Butterfly makes a bit more sense, a little easier to trade it, and might be slightly cheaper. I would probably just default at the moment to using butterflies on SPX on Wednesday and Friday, but not for an earnings trade. I personally, for me, I find an earnings trade a little too binary. You know, it's almost like a black versus red kind of bet at the casino, right?
I just feel like rolling the dice on one for $40.
Yeah, look, if you want to do it, it's good. It's just, remember, the max gain on a butterfly happens at expiration. So trading them for an intra-week type of scenario, it can be quite hard. However, there's nothing wrong in setting up a longer dated butterfly using a different expiration series, slightly wider, and then trading it like a normal bull call spread. All right, so you trade it on the same basis. If you're getting it in for $1.10, you sell it for $2.20, you make 100%, you move on. You know, they have a slightly different cost dynamic compared to a bull call spread because of that double that you're selling in the middle. But yeah, it would work. It's just your expectations need to be tempered a little bit. You can't get the max gain. You won't get that 10-to-1 risk, you know, reward unless you're having it on their expiration. So yeah, could work. I think I like this chart. You know, for me, it's not a question of these two longer time frames. It's really a question of these shorter time frames. And if you look at how these are lining up, the 30-minute together with the hourly, if Google, opens up and it can close in the next hour above that 21, so somewhere above this level here. So it's got to be above yesterday's close. We have a potential run over the next 5 to 6 hours up to 2,500. That would be a pretty good move. And then if we could get above this, it opens up that move to 2.6. So, a small trade to start, maybe put in your plan. A break above 2.525 would then trigger the next trade. Whatever the next trade would be, largely dependent on what's happening here with the squeeze. If we get the squeeze to cross zero, we get the stochastic above zero, we see volume going positive, that would be a very bullish chart that we would use. So I think that there's something here, but you got to trade it carefully. Don't oversize, keep things small. Always remember, Amazon did that 4 ATR move in June of last year, which was the biggest wake-up call I certainly had, thinking that stocks can never do the unexpected. They can always do the unexpected. So with Google, remember, it gapped up in the last earnings. They announced the 20-for-1 stock split for July, and then it retraced the whole gap up plus more over the last 3 months. So it's a bit of a bet, but I'm sort of looking at this going, what, this is a 70% bullish chart, right? This chart here is bullish. This chart's bullish. I would give this a 5 out of 10. If this was a green vol band, I'd give it a bit more, but that bullish divergent low candle is very cool to see. That will give me hope for it here. If the price gets above that red zone, this chart becomes an 8 out of 10 bull. So there's potential. There's potential.
So are you gonna do something intraday today, or are you gonna try to play through earnings?
No, I'm gonna do something for May 6th. I'm doing the May 6 50 delta short with the 49 delta long. So it's a very short, it's a narrow spread. My risk reward is just a little under 1-to-1. And I'm going to look to close this around May 3rd. So I'm looking for the earnings. I'm looking for the pop. If I get the pop and this thing reduces in price, I'm going to close it out early. But pretty much my plan is, if it opens up in the next hour, it can be above the 21 here. I'll sell the put spread. My initial stop is a break below 24, 24, 21, somewhere there. Exit the Google trade. You can see it there. And as long as this volatility band stays green and I stay above my short strike, I'll stay in the trade. So that's how I'm going to play it. What else have I got that looks good? SOXL yesterday, towards the close, started to change on that 30-minute chart. You can see the 30-minute chart looking a lot more bullish. Yesterday was quite an interesting series of candles. So we had this divergent low. We started to get the higher price. You see how the squeeze yesterday sort of really raced back up to the zero line. And what's key here is this change in the stochastic. So we saw this go from red to yellow. So I like that. I'm not a fan of this bearish pattern that's happening here on the EMA spread. The EMA stacking is a little bit concerning. However, watching this chart up here, the 30-minute chart, we have a long trigger on our squeeze tool. If we can get this to get above this red zone here, we really just need this to get above 26.34. Can it get above 26.24 or 26.34 today? Big question, right? So here we've still got a Mary put on SOXL on our shares. I bought some long calls yesterday just to see if we can get that move to the upside, and we'll see how it goes today. The other one that I did yesterday that is interesting is Moderna. You can see that massive divergent low bar that printed at 9:30 yesterday morning. You can see the squeeze starting to reduce to the downside, and we have a minor buy signal that's triggering here on the stochastic. I've got long signals here on the 30-minute. I've got a long signal here on the hourly. I have a divergent high here on the daily. And I'm sort of consolidating here on the weekly, right? So what I'm really looking for is the end of Friday to close somewhere up to, this 188 level here. If I can get a close on Friday somewhere up here, that would be great. It's a big ask. I'll be honest, it's a big ask to expect the price to move that much over 2 days. Here, I'm just looking for that 21. If we can hit this 21 at 155, We know this chop is going to be there. So I'm really, I put a trade in. I want to see if we can get above here. If we can get to the 21, I'll probably take profits at the 21, wait for it to close through here, and then trade it onto the upside. This is the easy money trade here.
Mm-hmm.
So, when you trade, the way that the system here is built is it creates these zones, and the zones really help you decide whether or not you want to be in the trade or not. So here, if you wanted to trade from here, you just have to be aware of this. Now, you could trade this conservatively with the intention of getting it through that line and up, or you could just wait for it to clear that line and then trade there. So someone who doesn't have the zones, or someone who uses lines are very binary, right? And remember, it can hit the line and come down. The zone gives it a little bit more leeway, right? I know that it's going to be facing some resistance in those areas. So I'd rather set my levels above a zone rather than above a price line. Okay, a price line is just too thin. It doesn't give me any flexibility. It's either above or below. What happens if it's in that range where I anticipate the choppiness? I want to know, okay, well, let me see if I can get through that zone of resistance first and then trade. It saves you a lot of pain in options trading not to be holding a position that's chopping around like that. That just chews you up. So for Moderna, I've got some long calls. I'm probably going to add to my trade once I get above here. Long signal triggered. This divergent low is really good. A little bit nervous that the squeeze fired to the short side here. That could be offset by this divergent low. So I can't expect too much of an upside. All right, so I've got to be a little bit sensitive to that. But by and large, I like the look of this pattern that's forming here on the 195 minute. This is my key chart. I take most of my signals off here. That minor buy signal here, together with a squeeze that's moving to the upside, so the momentum is shifting to reduce to the downside, gave me a trigger. So I'm in on that one. And let me see, current book. I'll pull out some of the ones that I've got here on the current book. So let's see. Let's have a look at RLI. So last week we did a really nice trade on RLI. The trend has shifted predominantly here on the weekly. So we did a bull put spread and long call combo trade up on that pop to that divergent high over here. This was can't remember, I think it was a 4x in one day, I think it was, something like that, here on that trigger. So we got from here up to here. We got this divergent low that printed. However, our moving averages kicked us out of the trade at the same time. So we've still got positions here. What we're looking for is a continuation of this momentum, continuation of the stochastic being green. But if you look at these intraday charts, you could see under the 21, above the 21. These under the 21s are a little bit concerning. So, we've exited, I've taken profits on the put spread. I've still got the call debit spread, or sorry, the long calls, and those are taking advantage of this signal down here on the weekly. So once we get above this gray line, you can see my two profit lines over here. I've got my targets already set. So key thing is just to trade the volatility bands. At this point, the volatility band is the most important indicator, because as soon as it shifts color, it's the most preemptive out of all of the signals that I have, because usually it's a precursor to shift in trend. So you never want to be long in something that's gray. You want to only be long in the green. So there's definitely opportunities.
What about XLP and
let's have a look at those.
XLRE?
Let's see on XLP. This sequence that we had here will probably be looked at in a couple of weeks as great opportunities to add to a trade.
Yeah, but I added a call yesterday. I was just
nice. That's the type, if you see here, if we get the 21, it's going to load in a second. Once the 21 loads, you can see the 21 here, right? This line. So any type of pullback that you get there often results in a nice entry. The thing now is it's in this gray volatility band, right? So as long as we're in a gray volatility band, it becomes hard to justify a bullish trade in its entirety, right? If you're trading this green trend, yep, that would have been a good adding opportunity, but make sure that you've got your levels in place to tell you where you know that trade breaks. So the trade break would be a close below 77.97 for now. So if it drops below 77.97, you want to close your trade, exit, wait for it to re-trigger. But for now, it looks like it's just, trending up. Look at the 30-minute chart. You got a divergent high printing. Nice color change here that we have. Here, we're about to get a color change. We're about to hit the 21 on the hourly. Here on the daily. So I like the 195-minute chart. The 195-minute chart gives me 2 signals a day. The daily will give me 1 signal a day. The 2 time frames that I get the signal, one is at 9:30 in the morning, the other one is at 12:45. And that's just the way I like to trade. I like to, get 2 signals a day. Some people prefer the daily chart. So if you're just trading the daily chart, divergent high, pulls back, touches the 21. Here you can see it almost touching the 21. And from here, this would have been an opportunity to add. And it will probably go like that. It's going to probably go there. So XLP looks good. XLK, oh man, I did this regression trend just to see how it's sort of holding its sort of 2 standard deviation wide channel here. There's very little bullish things that you can pull out of this chart. It's not the easiest chart to trade as well. XLY.
I'm in XLRE as well.
XLV?
XLRE.
XLRE. So yeah, on the real estate side, it's similar to XLP, right? Hits the range line, comes back, hits the range line, hits the range line, crosses the range line, comes back. Bit of a brutal crossover here.
Yeah. Squeeze
going to the short side. Stochastic momentum is dropping. Volume drops below 0. Here you can see if it drops below there, 48.45. 48.45 is probably going to be your stop for now. But on the day chart, you have a divergent low that printed yesterday. So this divergent low, if we get back above 49.46 today, you've got to move up to 52 coming. So not too bad. It all depends. This is the thing. All depends on the chart you're trading, right? I can find bullish and bearish on one stock in different time frames.
No, I'm trading the day chart. I'm just trading
it looks fine.
Trend. Like everything I have is like, I've got like 145 days or something to expiration.
Yeah, that looks fine. Just make sure that you've got a level, right? So if this triggers down here, 48.42, 48.32, somewhere here, just close your position, wait for it to get back above these levels, and then go back in. Don't hold a bad position while it's dropping and then hope for the best on the recovery. Just get out, wait, then wait for the re-trigger. Then you should be fine. But all of the sectors look fine. Oh, not fine. I think there are a lot of sectors that are sitting in the top green quadrant at the moment. The challenge that you've got is that, trading, if everything sits in the top green, the only place that they can go is down to the yellow. So you've got to be very careful about overloading in any of these particular sectors right now. We're in unprecedented times. Many traders have not traded a bearish market like this before. So be sensitive on sizing, be sensitive on expectation. Don't overcommit to anything and trade the signals. Just try not to have a bias. Try not to this must go up kind of mentality. If you have a must happen kind of mentality, you're going to be horribly surprised.
What do you think about we're going to see a little more downside on SPY before it's over? I mean, obviously nobody can know, but what's your
gut feel? I don't think we're done yet. I think that these rallies that we've been seeing are all sort of head fakes. Here's the 21. Until we get above 438, anything that happens underneath it is to the short side. Will you be able to trade a bounce from here to here? Yeah, of course you can. Nothing saying you can't. I've got a position that's long SPY. I took it yesterday based on the change of the vol band here. And I've got my level here. I'm doing a long call here.
Short duration call, like a short duration long call.
Yeah, my expectation is to hold it for a short term, but my actual expiration is long dated. So I've gone long in the money with an expectation to close it in a very short while. So why I do that is to minimize the degree of positional volatility. So by going far out and deep in the money, it does cost me a little more, but I don't suffer the amount of swings that you would have if you were trading closer in and maybe out of the money. So it's just a slightly more conservative approach for me. Now, here's where things go a little bit wonky, right? Look at the change here. You see how it's gone from a neutral trend now into a bearish trend. The squeeze is fired short. These kind of moves are not real. So you can get suckered into them. So I've got a very short profit trigger. If I can get the price there, I'm out. I will take my money and wait. I'd rather just take a short trade here, wait for it to break there. Once it breaks above 433, then I can trade it safely to the upside, but not before. And it's the same concept of don't throw bullish trades into the market when the market is strongly drifting to the downside. Because if you're not watching your positions, you're going to come back home from your office job and suddenly see everything looking crap, and that's not what you want. So be very, very careful about over trading in this kind of market. I'm also very, very light at the moment. I don't have a lot of positions on.
What are you looking at for this week?
The only trades that I'm looking at right now, the Google one is one, and down here I've got Moderna, I've got SOXL, I've got SPY, I've got this one. I found this morning. I think this one is an interesting setup. Let me talk it through. So I sent this out to subscribers this morning. The only thing I just want resolution on before I go in to the trade are these divergent high bars that have printed on the hourly and the 30-minute. That needs to resolve itself. So if we open up above this red zone and then get a close above the red zone, this basically negates itself. We'll need to see that. So around about 10:30, 11, I'll check this trade out. But if you see vol band has changed color, I'll get a long trigger somewhere up here. So you can see if the price starts to move there's where I'm going to get the trade set up and trigger. Here, I've got an MA entry. I've got a mid compression squeeze. My stochastic has gone green. Big volume breakout yesterday. These guys make electrical vehicle chargers. So, we all know the theme about energy at the moment and the importance of the electrical green thing. So this could be an interesting trade worth looking at. How I'm going to play this really depends on how long it takes for it to get there. If this is going to be a very quick move, then we can play it. But if it's not, no, I'd rather wait. This one was a reasonable trade a couple of minutes ago, and then it sort of had this pre-market price down here. I don't know what was going on, but this one could be a trade. If it opens up lower, this one also looks pretty good. Look at that day chart coming out, breaking up. There's the move. We need that to happen. So I've got a trade just here. So if I get this trigger above here, you can see the pre-market is going to open up inside the range of yesterday. I need it to get above that line. If it gets above that line, I've got a trade that I'm going to do. And there you can see the squeeze already starting to fire, stochastic volume breakout. This one looks pretty good. Just need to get above that line. That's the thing. Everything needs triggers, right? And then Google. Those are the three worth watching. Market's going to give you opportunities. It's okay to also sit back and do nothing. Don't be forced to do anything.
Google's an XLC, so assuming Google pops on earnings, we should see a little bit of a.
Just remember, XLC is dominated by Facebook. Yeah. Google is in there, but Facebook also plays. And don't forget, you got Netflix, and we all saw what happened with Bill Ackman and his $400 million. Flash. He should have had my tools.
Crushed. There have been some of these companies getting just hammered and crushed.
So XLC, nothing's really going to happen until XLC can break 64 up here. So I wouldn't even be going in there. I don't think Google can even lift this up because the weighting is just not enough. Facebook, Disney, Twitter, could do something. We'll see. Hopefully Twitter moves up a bit today. now that the pricing is being set. So, you know, at least the pricing should normalize down to where Elon's offer is. So, or up to where Elon's offer is. Yeah, it will be interesting to see. Worth playing, small opportunities. Don't get too overly enthusiastic. This is not a, it's a trader's market, but it's the type of trades you do that's really important. So don't oversize anything. Stay calm. If the markets are choppy, go read a book. Don't play other people's games. Don't get messed up in other people's nonsense.
Good advice. Good advice. I've been again trying to keep it light just so we pick a direction. And I don't know. I'm just trying not to give myself more gray hair. Like,
dude, you got more than enough.
Last year I had too many positions on whenever we had all this chop, and it was just it was hard to, it's hard to manage. Like, I don't, you know, especially like you were saying, you always want to try to fit in your trading style with your lifestyle and your personality, and where I don't get to check my computer a lot sometimes during different times of the year. I want to trade longer time frames, and so sometimes I'm just out for a minute.
Yeah.
Bless you.
Oh, excuse me. Oh, summer, it's the seasonal change here in Canada, man. Must be a skunk somewhere outside.
Do you have allergies? Do you get
allergies? No, I'm just allergic to bad service, crappy markets, and skunks. All right, my friend. I'll talk to you next week. Have fun. Good luck to everyone out there. Trade safely. Stay safe.
Good stuff, Chris. Take care.
Cheers then.